Good evening, everyone. Thank you. Thank you so much for joining in. And we are here at DataCon episode 19, and it promises to be a great session. So I will be the host for today. My name is Mark Lionel John, and I'm the Chief Operating Officer of NewPy Analytics. Of course, we are a data company. We love to look at data. We live on data. And so in that stead, we are going to talk today about talk with a person who handles a lot of data. He is the CFO of Unilever, the beauty and well-being, and he is located in Europe. And he has been kind enough to join us and break certain concepts down for us that helps us understand what data really does in the role of a CFO, and how does data affect the life of a CFO. So I have with us today Mr. Max Bridge. So Max, welcome to DataCon episode 19. It's a pleasure to have you here. And as you requested, I'll allow you to do your introduction to the folks who are joining in.
Fantastic. Yeah, big thank you to you, Mark, for having me on episode 19. And I think it's fantastic that you guys have got such a love for data and such a great series that you've got ongoing. So, very honored to be here and looking forward to a very interactive conversation. So as you mentioned there, my role at Unilever is the CFO of the Beauty and Wellbeing division in Europe. So as a global organization, the way we're structured is we have four different portions of our business, four different divisions. One is in beauty and well-being, which is all around hair and skincare. We have personal care, which is around sort of body wash and deodorants. We then have our home care division, which is typically around laundry and home cleaning. And then we have our foods division as well. So as I said, I'm looking after the finance side of things within Europe for our beauty and well-being division. I've been at Unilever for just over 7 years, so 7.5 to 8 years now. And I've had a really fantastic career here so far. So lots of different opportunities. I'm currently based back in Europe, but I've worked across a series of sort of global roles where I've dealt with huge amounts of data and abundance of information, where I did a role in investor relations with our old CEO, Alan Job. And I then spent 3 fantastic years working very closely with your team at NewPy over in the United States in forming what was known as the Wellbeing Collective, which is really a fantastic division focused on vitamins, minerals, and supplements. And that's really where I got a bit of an appreciation for data, and very much a big part of that journey and that education came from NewPy as well. And then I started this role here back in Europe at the end of 2024, so November 2024. And it's been a fantastic journey so far. Lots of ups and downs, some real challenges there, but I do think that data, information, being able to get real-time insights has been a bit of a guiding light in navigating some of the challenges that we've seen, and also, supporting some of the success that we've seen in the business over the past year and a half. So honored, privileged to be here, and really looking forward to an engaging fireside chat.
Wonderful, Max. Very good introduction. And I think, they say that the millennials are the generation that grew up without technology and suddenly was thrown into a lot of technology and all that. And you as a CFO started in 2024, was at a point when, there was AI around, and now it's in full-fledged implementation. So you are kind of in that place where maybe, I am confident to say when you joined the role, that technology that was being implemented now must be vastly different. And that is how the industry is moving, and so that's quite interesting, actually. So Max, we are going to break this down, and I'm going to talk more about your journey over here. So for the audience, the topic that we're breaking down today is the new corporate asset. Why data is becoming the CFO's most valuable line item, right? Where I am, as a CFO, considering the importance of data, and it is something that I really invest time, money into managing, right? So that is a topic. And Max, any opening remarks on the topic? Anything you want to talk about before I get into my first question for you?
Yeah, look, thanks, Mark. I think for me, information and data is in abundance and it moves very quickly. Technology, there's the old idiom, right? You could never underestimate how quickly technology changes. And you've seen that over, 50, 60 years, right? The evolution of technology and the evolution of how that's impacted our working culture, the way that we work overall. And I think that that will continue to be the case. So what I've always found fascinating, particularly in the finance roles, is we tend to be what I call the custodians or the stewards of the business. We try to make calm, rational decisions, and the foundation of any calm, rational decision is data. And so I think it's a fantastic topic, and I think as we've evolved, as you said, as I've evolved, even in the past year and a half since I started this role, as the journey has evolved and we've got more and more information and more data, I think the role of finance within that has often been to partner very closely with organizations such as yourselves to break down key insights and be able to take very simple action orientated decisions. And so, as I said, I think it's a fantastic topic and excited to get into some of the details of it.
Great introduction to the topic. Uh, and I think one thing that I really want to stress on is that is it real that the amount of data that has been coming in into the world, and is it really changing? Is there a shift? You know, is it that there was always data, and you as CFOs, you were not it was there as a large repository but wasn't getting utilized, and now it is more accessible and is more visible, and its connection to strategy is more visible. Uh, is that the case?
Yeah, look, I think it's a fantastic question, and to kind of condense that round, it's as I said, there's been a shift. I think there has been a shift, but I think it's been a bit of a continuous evolution. Now, where do I see that in the function, the finance function, and for me, let's say as a CFO of a business unit, I think the CFO's role and the finance function's role has really shifted from reporting information to being business partners and shaping decisions. You know, data is guiding us in every decision that we have, whether that be a pricing decision, whether that be a growth decision, whether that be an investment decision. And it's not just about sort of the month end, how can we just consolidate the numbers at the end of the month, push out a simple P&L or any of the other financial statements. It's moved away from that into every single day, every single week, gaining new insights. And those insights have come from a huge array of different areas. So previously, the data that we saw was always internal data. There would be some external data, maybe some general market growth data. But certainly now we're seeing data from a whole host of different areas, whether that be, market shares, whether that be, some of our supplier data, whether that be some of our external retailer data, or whether that be our internal data. We're getting that sort of week in and week out. And I think, therefore, as a finance function, we're evolving, as I said, from just reporting internal data to consolidating a whole host of information. And that's really allowing us to be able to take more strategic decisions and also be more actively involved in a lot of other functions. So what do I mean by that? Finance historically has been isolated, as I said, into kind of reporting data, reporting finance, and sticking to that. Now, what I really see is that every decision that gets made, whether that be a sales decision, whether that could be a supply chain or procurement, or whether that be a marketing decision, there is a lot of data that is now used to back up those decisions. And I think that a finance person is therefore often in the room with those conversations, both from their ability to be able to digest and understand data well. I think finance people are naturally very numerically literate, but also because that data now impacts a lot of financial decisions. And therefore, finance is there being a custodian and trying to help and shape that decision.
Wonderful, wonderful. So I think it's interesting that I mean, finance, why they are the custodians of a lot of can I spend, can I not spend? And they typically, in the old sense, we think that finance is the guy who will, who's hard to convince because he controls the money. Uh, to a person who now is no longer just being frugal, but actually being someone who is insightful and has a view of what is the impact of a decision and can justify the finance spend or not. I think that's a very interesting shift that you really brought, right? And that's quite cool, actually. Now, the thing that you said is that this requires a lot of data from multiple places, multiple systems, right? Does it ever get overwhelming? That for example, in two senses, right? Overwhelming from one is that, okay, I have a lot of data that I need to process and a lot of things to go through. And the second one is I have not possibly looked at all the data points necessary, and I'm possibly maybe missing out something. Uh, any comments on that? Because that fear of being left out in the sense of, am I leaving out or missing out some critical information, and thus getting
Yeah,
overwhelmed in two sides. Yeah.
yeah. Look, it's a fantastic question. I think so. For me, fundamentally, yes, more data can create more noise, and it's really therefore the translation of what's data into information and actionable decision making. I think without prioritizations, teams tend to drown in dashboards. You can always create another dashboard with another, set of KPIs. But what's important is to be able to focus on those key KPIs and those key, what I call cells. So let's say key portions of your business that are able to really turn the needle. And I think that abundance of data allows us to focus in and quickly digest the problem with those cells, those key portions of the business. But what is important is always to be focusing on those key cells and those key metrics that turn the needle for those portions of the business. Now, with more data also becomes more challenges. So one is the noise, but the other thing is consistency of information. So one of the things that I've actually found quite challenging as a business leader is if I look at all of the different markets across Europe that I look after, approaches, cultures, capabilities of teams, capabilities of systems are very different. And so what actually can become quite challenging for me is to try and find equitable data. So what do I mean by that? If I've got one market such as the UK, which is one of our major markets, and more advanced in terms of its data and its capabilities, it's key that we are able to have consistency across certain metrics with other markets across Europe. And that's really important for me when I'm making investment decisions across Europe as a whole, because I need to be able to trade off one market versus another. And so I do think that is a challenge that an abundance of data has also started to highlight, which is how can we ensure that there is consistency and quality of the data? The last thing I'll comment, Mark, is really, I think business and decisions also come a lot down to intuition. And what do I mean by that? Data is fantastic and it's great to be able to digest that. And as I said, it's really important to prioritize that in certain areas. But what's also key is to be able to have the teams that are able to understand the data, digest that data, and make a quick and actionable decision. And I think for part of that, you also need to trust your intuition and your gut feeling from your years of experience within an industry to be able to make that decision. And so I think it still also always comes down to a bit of a mix of that information and that data, but also, once again, the human element of it and being able to have a clear, decisive action that comes out of the information that we have at hand.
So wonderful. I think the roadmap that you've built for us is of an analyst is possibly someone who is able to have an evaluation metric in terms of identifying, as you said, the key cells or the KPIs or actually what matters, what should I be looking at? And then also considering a bunch of things around it, like it can be experience, own or acquired. It can be culture. It can be the way people function, and of course the team really has to imbibe all these strengths and characteristics. So to maybe on a question of helping a team be better at decision making, or setting up decision making platforms for CFOs to take decisions. I want to ask one particular thing. You mentioned this key cells. If I may, what are few tips that you can give a data analytics team or a budding data analyst to be able to evaluate that if this is a business, this is how I arrive at my key cells? How do I distill and understand what really matters? Of course, you can answer definitely from the perspective of Unilever Beauty and Wellness. But would just like to, if you can give us a high level framework of how we can think about this.
Of course, yes, it's a fantastic question. So for me, I kind of use, Pareto's 80-20 law. So, how can I make sure that I am focusing on those key portions of my business? And I'll give a few examples that drive around 80% of the outcomes. Now, for me, when I look at our business, I chunk it up into my key brands across Europe. So in my case, it'll be brands like Clear, Tresemme, Sunsilk, Vaseline, Dove, Simple. These are some of the big brands that we have. And then I'll focus it on my key countries. And then I ask the teams in those individual countries to distill that down further. So I'll have a European, let's say, key sales. So maybe that's UK Simple, which is a big kind of brand for us here in the UK, or Italy Sunsilk, or Germany Dove. These are key cells for us that tend to make up, as I said, we tend to get around 30 different cells that would control 80% of our business. Then what I also challenge the teams to do is to then do that on a country level. So with my team, which there's a key finance personnel in each one of the markets, let's have your dashboard, right? Your understanding of what are the key cells that turn the needle. And what I like to add in those examples is what are the key customers then within there. So for me, I might ask my team in the UK to look at Simple in Tesco or Simple on Amazon, because I know that cell is absolutely key to be able to understand the performance of that Simple brand. So that's how I would define the cells for a business overall. And as I say, they always kind of ladder up, right? You start at the top, you kind of get more detailed as you go into different chunks of the organization. But what is key is that every person within their portion of the organization knows which cells that they individually need to focus on and that will turn their needle. Now, when it comes to KPIs, I like to break this down into input KPIs and output KPIs. So an output KPI for me is something is mainly the P&L. And I like to focus on three key things in the P&L. One, sales. Key thing. Are we growing more? Are we selling more than we thought? Two, profit. Am I making more money than I did versus the previous month? And am I on track, right, to land what I need for the year? And three, how am I converting that into cash? And I think fundamentally, if you have a good grip of those three metrics, everything else is an input KPI that drives one of those three things for our business. Now, when it comes to the input KPIs, you can get an abundance of them, right? You can obviously look at various different metrics that would drive each one of those things. Now, for me, we tend to break then down that output KPI into a series of different input KPIs. So for sales, what is driving my sales? Is it an increase in price? Is it an increase in volume? Or am I selling a more favorable mix in terms of the products that I sell? When it comes to profit, am I expanding my gross margin? Am I investing more of my fixed costs, whether that be my brand and marketing investment or my overheads? I'd be looking at both of those lines. And then when it comes to cash, I'm looking at my working capital. I'm looking at my CapEx spend. And then I'll be looking at any sort of restructuring spend that I may have as well. So for me, you can always, once again, chunk it up, but the key ones that you need to be looking at is the, as I said, our sales, our profit, and our cash. And what I've actually really valued from working with your organization, Mark, is that when I've partnered with colleagues like Manor or Tenzin, is the ability to be able to understand data and understand what are the KPIs that the team really needs. And I think that's where I encourage anyone that's listening that works within this field is think about it from a business perspective as well. So when I always talk to data people or people that work in analytics, I always say, if you're interacting with the business, 75% of your knowledge needs to be around the business, 25% of it needs to be on data. And I actually challenge the same to my finance organization. You're a business partner. 75% of your understanding needs to be around the business, not just within finance. 25% of it needs to be around your specific role in finance. And I think that way you get a very balanced approach and you focus on those key outcomes. They're going to drive the right, output KPIs that are ultimately going to, drive the health of the business.
Fantastic, Max. I think so. You've given us a very good framework. And if I could break that down from a mindset perspective, I think the mindset is have that entrepreneurial mindset where what you're doing, you're owning it. And as an entrepreneur, and if you look at the output KPIs that you mentioned of sales, profit, and conversion into cash, that is typically what any business owner would look at. Whatever I do, the purpose of a business is to do that. And am I able to do that? And is everything feeding into that? So I think that fantastic framework for us to follow. And I love the advice, and I'm sure the people who are listening out there definitely love the advice. So Max, the next thing, okay, now moving away from the mindset and all that, let's talk a little bit about technology. What are the tools that you guys use or that a large enterprise uses to actually help churn data and manage it better for finance? Anything particular you want to call out? Anything that you want to talk your experience about? And just let us know why that really has helped you all.
Yeah, so look, the first thing I would say is technology is there to enable the outcome that we just talked about, right? Which is sales, profit, and cash. What do we use in terms of technology? So look, the first thing we have in finance is really a robust ERP system, right? What's key is that you're able to get the financials and get the insights that we need to be able to run the business, the internal data metrics. And that tends to form in a really good ERP, whether that be, something like NetSuite or SAP, whatever it may be. It's key to have a good configuration and a ERP that is consistent across all of your business. So we can all speak the same language, which I kind of touched on before. Then from that's one source of data. As I mentioned before, there are various different sources of data, whether that be internal data, such as I said, the ERP, whether that be external sources of data. So external sources of data that we tend to use would be making sure that we can get an API that would link into any of our partners. So whether that be our supply partners for anything around the supply chain or around procurement, or whether that be some of the customers that we deal with, such as, the Amazons, the Tescos, the Boots, the Superdrugs of the world, that being able to dock into that information is key. So the way I kind of think about it is you've got a web, right, of different data in source, sort of inputs. And then obviously you need a really robust data lake. And you need to then be able to have that backbone of a really robust data lake, which then allows you to be able to kind of analyze that data in a flat, coherent structure to be able to then generate, the right front-end reports and the right analytics. So what do we use? We use, as I said, all of those data sources. When it comes to the analytics platforms we use at the moment within Unilever we on a Microsoft kind of backbone. So we use things like Databricks. We then use, to be on the front end, we use a lot of Power BI. And then we're starting to integrate a lot into sort of Copilot as well from an AI perspective. Now, when it comes to all of that, as I said, consistency is key, and having a robust back back data source is important to be able to then drive the right front end insights. And so I think it's important that you have a reliable foundation there. And for me, that's really important that you then have robustness in terms of governance. So are we making sure that the data is clean? Are we making sure that it's coming in on the right working day every single month? And therefore, are we able to then run the forums and meetings and ultimately make the decisions that we need in a timely, structured manner each and every month? The last thing I'll comment on here when it comes to technology, Mark, is also around accountability. So one of the things that I think is really important as a business is that it's clear who is accountable for what, right? And I think sometimes when you have an abundance of different data, when it comes to the governance, you can get lost in terms of accountability. Who is key to ensure that that data is clean, reliable, consistent, and timely in terms of when it is? And I think it's really important when you look at the different sources of data to be able to have a clear owner within that data to then be able to kind of, drive the right outputs that we need.
And fantastic, Max, because that pokes the, you're thinking in a direction of, I am investing quite a bit in all these systems, and I'm sure you guys are investing quite a bit because these are systems that are touching various business units across the globe, pulling it in. So there is a financial investment that is high. And I like the fact that you talked about reliability, governance, and that which boils down to trusting the number. At the end of the day, are you trusting the number? Right? Very simply, Max, I mean, trust. How hard or how easy was it for you to start trusting numbers that are coming out of the technology that you'll have implemented? Was it easy? Was it quick? Or you had to have these multiple validations before you said, okay, fine, now I can trust the numbers that come out of these systems?
Yeah, look, I'll be super frank with you, Mark. I think it's a journey we're still very much going on, and I think that trust is really difficult to build. It takes a long time to build with teams, but it's lost in a second. And that's one of the key things I always say to the team, right? When we showcase information, whether that be from the tech portion of our organization, whether it be from the finance portion of our organization, data integrity is the number one most important thing. Can I trust the number? As soon as you lose trust in that number, it's really challenging to gain it back because people dismiss that tool quite quickly or dismiss that source of information quite quickly. And that can be rightly or wrongly, right? There can be a one-off mistake, but if it starts to build a pattern, there's obviously a structural issue there which you need to tackle. Now, when it comes to trusting data itself, I always say that's the backbone. Can I trust the information? If I can't trust the information and I'm not happy with that, then I won't release it to a wider audience. And what I like to run is a sort of a series of MVPs, right? So can we just have the first iteration of the data, whether it's a new system or a new technology? Can we just roll that out, be comfortable and trusting with it? And then we move on to the next iteration of that technology, right? And I think what's really important is that when technology moves so quickly, it's important to make sure that the teams still understand the reason behind the data, those key three metrics that I talked about, right, of sales, profit, and cash. And it's important that you still understand that technology is there to support us and to make us more effective and efficient and drive more insights. But it still doesn't take away the core fundamental governance and processes and structure that you need in place. And so if you start to see that the technology is outracing the governance and the structure and the process, because you can't keep up with it from a governance structure and process point of view, I always say to the teams, dial it back, make sure we trust the information, it fits within the governance frameworks that we have before you then start to move faster. And candidly, that's a challenge, right? Because people get excited by new data sources, people get excited by new technologies. And it's really important that we embrace those new technologies, that we try to learn and evolve and keep up to, up to speed with these changes within the market. But it's also really important that you ensure that there is trust in that technology and that it drives the right outcome and the right business decisions. And so the challenge for an organization like Unilever, especially a massive organization like Unilever, is how do you keep up with that pace of change? And particularly from a governance, as I said, a governance and structure and process point of view, how do you keep up with that pace of change? And so for me, the challenge I have with the organization, as I said, and it's still very much learning, is not from is less from the technology side. It's more from the governance structure and process side. Can we make sure that we as an organization can move at a pace that allows us to make the most of the technology that's out there?
Perfect. Very well said. Feeding off one of the statements that you mentioned about the excitement around new technology. And I know we are towards the end, folks, but this is a valid question. And I think many of the people listening would have this question. And it's obviously going to be about AI. We are all excited about the technology. It is out there and we are eager to use it, eager to give access to a lot of our data systems. We know about how OpenClaw is taking over a lot of people's lives and feeding off their data and functioning. Right. So a question to you, Max, on AI. Right. I know you look at the finance function, confidential data, a lot of things are there clearly. But I want to ask you this, where do you see AI agents or intelligent automation creating the most value for your finance function and for your teams? And another most critical question, a follow-up question, where do you still think human judgment remains essential?
Yeah, I think it's a fantastic question. And it's the question, as you say, that's on everyone's sort of lips, right? It's the big technology that's out there and it makes meaningful impact. Now, where do I see it's best suited? I see at the moment where we use it mostly is around automation of reporting. So taking away some of the manual tasks that we see month in, month out for teams. That's the first place. The second place I see it is that it's very good at giving a base layer of future prediction. So what do I mean by that? When we look at forecasting, we think as humans or as businesses in different countries and different geographies and different regions, that everyone is diverse, that everyone is unique, that everyone has a different perspective. And whilst that's true, data suggests that there's a lot of patterns. And so I think what AI is fantastic for is being able to recognize those patterns and provide a base layer for someone to then make a judgment or decision on top. So what we're using a lot for, I'll give you a tangible example, is in the UK business at the moment, when we look at our monthly forecast and we're looking at details by SKU, we have got a base forecast that is built for each one of our sales teams that is using AI. It is using predictive technology based on historic run rates, and that forms the base of what would be a correct forecast. Now, where do I think humans are essential? Humans are essential, therefore, to add context behind the numbers, make those judgmental calls, because maybe that there is something that is a one-off in this month. So let me give you a prime example. That base will give you a historic run rate. It'll give you seasonality trend. It'll see the performance based on various different input KPIs, and it will suggest what your sales would be the next month. Now, if I know that, for example, I've had challenges with a customer and that they have moved my shelf positioning from eye level in my supermarket down to the bottom shelf, that is a less favorable place for me to be when it comes to the product, my product placement. And therefore, I can expect a step down in terms of my performance because the consumer is not going to have it at the eye level. And so information like that is key for the sales team to then be able to overlay for those product lines, to be able to say, okay, right, I need to decrease my forecast by X%, and sometimes that X% is informed by once again, by data, how much do we sell at eye level versus on the bottom shelf? But I need to be able to drop that down in terms of my forecast because I know that a decision that was made with a customer has directly impacted, my forecast. So that's really where I see at the moment that we're using it as a bit more of an advanced piece. Now, there's also some very other exciting stuff that we use it for, that is a bit sort of further afield and less, let's say, in the realm of finance. One of the areas we're using it for is for scanning shelves. So at the moment, we hire a lot of people around Europe to take, photos of our shelf positioning and look at, have we got exactly the products in the right place? How does it look on the shelf? Are all the products full, or do we have any gaps in terms of some out of stock on the shelves? And now what we're finding is that we're able to go in and work with an organization called Smollen, and they take videos of all of our shelves. So they'll walk through, they'll video all of our shelves. AI will then support us by digesting all of that information to then take that information that they've been able to digest it into numerical data and then be able to spot maybe patterns in terms of where we have consistent out of shelves or where the product placement is not as we desired. So, as I said, a bit of a range in terms of what we're using, but we are seeing that from a finance perspective, we're able to get a bit more predictive, which is helping us. And then from a more advanced place, for example, in sales, we were able to see some really interesting use cases and pilots that we're running in certain areas of the world.
Right. Fantastic. I think that is all we imagined AI to be able to do. I mean, and I'm sure that AI will do a lot of things better than what we could earlier do. But Max, the key question, I mean, where do you still see human intervention required, and how does the human in the loop still have relevance at this time?
Yeah, so look, so as I said, you still need a robust business, right? You're still trying to generate sales, profit, and cash. And humans are essential, as I said, behind the context behind the numbers. I gave that, a little bit of example in the first place, but also sort of other calls. So, for example, retailer negotiations, right? The information is great, but AI can't go in and sit down with Tesco and have that negotiation. A lot of that's relationship based. I often joke with our sales organization, I want you to be trying to be the godfather of, the son of the Tesco, buyer. I need
Right.
you to be having a really, really tight relationship with them because we know that humans are fundamentally biased. We are all subjective in a lot of our decision making. And that relationship that, for example, a sales team could have with, a Tesco buyer is key to be able to land, the best cost for us, the best product placement on the shelf, the best feature space for us. And so it is really important to have that human connection. Another area, Mark, is very much also within ethical calls, right? Unilever prides itself on a lot of the sustainable living code that we started, a lot of the work that we do with the UN. And there are sometimes some very ethical calls that you need to make, whereas AI might suggest that for the financial health of the business, it is best to go down one route. But we may know that that is not the case. A good example of this is for us within our supply chain, where we work with a lot of small partners across the world. And we find that AI is recommending that we reduce the sort of payment days down for a lot of the suppliers that we're working with. But that puts a lot of strain on cash, particularly in small suppliers that, maybe they are a very small business. They need that cash flow to be able to support them, and they provide a key, they're a key supplier for us in terms of the ethics or whether the sourcing policies that they have. Now, AI has, I know, historically recommended that we push these individual suppliers down to a very tight number of working days in terms of their cash payments. But we have said from an ethical point of view, we wouldn't want to do that because we believe that it's the best thing for that individual, and we want to support, entrepreneurship in different areas of the world. And so, as I said, sometimes you have these ethical trade-offs, sometimes you have these relationship buildings, sometimes you have the context behind the numbers that very much humans need to be able to be making those calls and those decisions.
Absolutely. And I'm sure NewPy is a beneficiary of those ethical decisions that you all are making. So,
Exactly that.
so thanks a lot, Max. That's it. That's it on my questions. Before I conclude and summarize, I just like to know if there are any questions that we have from the audience. So, Priyanka, I'd like to hand it over to you to present a few questions from the audience to Max.
Is we live in era where data is accessible to anyone and everyone. At this point, even an Excel guy can make a dashboard. Why are still companies failing when it comes to decision making? This is the question.
Yeah, look, it's a super question. And I think, as you say, you can have a lot of the analytics and the information there. But for me, there's two areas to this. One is, do you have consistency and do you have trust in that data, right? So has the analytics that's been done and the abundance of information, can we trust that information? And two, is that information that we have, is it actionable to drive one of the kind of three output KPIs that I talked about, right? I think you still need very much, as I mentioned, the human to be able to go land and drive that action. And I think when it comes to when it comes to that sort of analysis and that data and information, as I said, you need to have that consistency, and then you need someone to digest it and drive that information forward. I would also say that I think you underestimate, because you guys have a data and tech background, how far other people are behind on this journey and how much in demand, people like yourselves and NewPy are. Because whilst anyone, you're saying, can digest an information, a lot of people don't have that skill set, right? Maybe you see it more towards a younger generation, people that are Gen Z, millennials that have a genuine interest or have had some formal training in technology. But you've probably got most people over the age of 40, so 35 to 40. So that's probably about half of the workforce out there that didn't grow up in a generation where technology was abundant. And so they're a bit entrenched in their own ways of working, their own culture, their own habits. And so one of the hard things actually for an organization is to upskill, the rest of the organization. And also the change management. How can we bring some of maybe the older folk, without wanting to generalize, the older folk along on that journey who haven't necessarily maybe got the skill set that younger generations really have around technology and analytics?
Many executives say they want to be data driven, but when the data contradicts their instincts, the instincts usually win. In your experience, does data really drive decisions or does it mostly justify them?
Fantastic question. And if I was being unbiased, I would say it's a trap that many people fall into. Everyone has a sort of subconscious bias that they have. And so sometimes it's exactly that, right? You try and fit the data to your narrative as opposed to objectively assessing the data to form a narrative. And I think that's where it's really important for executives to be able to have a deep appreciation of the business and understand that. Now, I'll give you a good example. And once again, it's very anecdotal and it's probably very dated. But, many of you have probably seen or heard about, Michael Burry from the Big Short and all the data there. And what you can see there is that by going into the details of the data in that financial case in 2008, he was able to question the data and read the data from an unbiased, objective opinion. Now, that gave him telltale signs that there was a structural issue within the housing market in the US, which then allowed his fund to do very successfully. However, it took a lot of bravery from him to be able to use the data in an unbiased way to be able to create an objective decision. Many people didn't do that, right? They saw the data the other way around, which was that they fit the narrative, which was to say the housing market in the US is too strong, it's never failed, that would rely on millions of people not paying back their mortgages. Now, they trusted the data to form that narrative because they had that preconceived, subjective notion. And so what I think is key for us executives is to always challenge ourselves, right? And if data is consistently telling us something that questions us, we need to be taking that seriously to make the best informed decision.
I think so. It's a lovely explanation, Max. First of all, good questions from the audience. Thank you for the lovely questions. Unfortunately, we cannot take them all because of the scarcity of time. But Max, lovely explanation. I think throughout the talk, you have broken concepts down for us very clearly, and in every anecdote or every explanation that you gave, you had actionable points for the audience to take away, ways to operate, ways to think, ways to function, the parallels you drew to real world cases, and of course, finally concluding with the 2008 crisis and the mindset that helped that, and the role of data, and the way you could look at data in multiple lenses. Beautifully done. Thank you so much, Max, for a lovely session. I think DataCon episode 19 has been phenomenal, thanks to your presence and thanks to your wonderful insights. And thank you, audience, for joining in. Thank you for the lovely questions that you put out, and thank you for your participation. And thank you, everyone.
Of course, my pleasure. Thanks for having me, and fantastic to see many, familiar faces, I'm sure, on the line there from NewPie. Thank you for the partnership with Unilever, and really honored to be able to be on this episode.
Thank you so much, Max. Have a good day. Have a good day, everyone.
Bye-bye. Thanks, everyone. Cheers. Take care.